Hey, it's Stu with Bitcoin and Financial Independence, and today's episode is called Know the Rules of the Game. A lot of us are playing financial games. We don't even know we're playing it. We don't even know the rules, all the rules, and the best strategies to win those types of games. Today, I want to talk about the different types of games available to us in life, sort of a big picture overview of the different financial games that people play and how new games have developed over time. And to be honest, most of us are probably playing at least two or three of these games. Some of us are playing even more. And there's probably some games that you can play financially that I'm not even going to get to, but I'm going to cover as much as I can. This episode is going to focus on two things. Number one is the different types of asset classes available to us. And number two, some of the big picture games and behaviors that people engage in with these different types of asset classes. Okay, so once again, most of us play at least a few of these games, and some of these games can encompass any asset class. They are all encompassing. Others are more niche or more specific to different asset classes, we'll say. So let's get started. And first up is stocks. There are a lot of different games that you can play with the stock market. A lot of people, for example, in the financial independence, retire early, or otherwise known as the FIRE movement, just do something called VTSAX and chill, or VOO and chill. This is basically Vanguard index funds or mutual funds that just buy the whole market because it's so hard to outperform the S&P 500. And statistically, it's very hard to do. It's almost impossible to do for the average investor unless you have some sort of information asymmetry and stuff like that. So that's one of the games that people do. It's also very popular with a group of financial people called Bogleheads that follow what Jack Bogle, the founder of Vanguard, encouraged people to do. And basically, he invented these index funds and marketed them. And they've become a huge part of virtually everyone's 401k, just totally changed the financial landscape. And that's an example of a game that was new and invented because a lot of people used to just kind of pick stocks. And we always had, I think, the Dow Jones for even longer. But this index fund type of game really didn't exist until, we'll just say, the 80s and 90s. It became very popular. So that's an example of a new game in a way, but it's a game that most people that are adults are familiar with at this point. So let's talk about another game you can play with stocks, which is dividend investing. You basically buy companies that make money. They're profitable companies, and they don't know what else they should do as far as R&D or acquisitions with their profits. So what they do is they pay dividends. They reward you for owning shares. And some of these companies will increase their dividends over time consistently as their profits increase. And these are called dividend aristocrats, companies that have steadily increased their dividend year after year after year. So that's another type of game. Again, I will probably link something in the show notes. You can Google this, but we're just going to speed through high level. On to the next game. Honestly, one I don't know a lot about, but some people will do swing or momentum trading, options trading. I don't really understand these very well, but I know that it works for some people. Again, high level, I'm not going to go into much detail there, so let's keep it moving. Moving on to a different asset class, real estate. A lot of people like to play this game. There's a lot of different ways to play it. When I wanted to get into the real estate game, I bought a book by Chad Carson. He's out of the Carolinas somewhere, and he has a book about it. I think it's called Retire Early with Real Estate. I'll link that in the show notes. He talks about the different games and strategies you can play with real estate. Like you can live in a house and then rent it. So a lot of people, what he'll recommend doing, maybe it's a newly married couple that wants to get into real estate. They don't have a lot of budget. They save up for a couple of years. They buy a condo. They live in it and stay there for a couple of years. And then they end up renting it out. Maybe they refinance as they've paid down their mortgage and created some equity. So maybe they'll do a refinance, move out of the condo, and then rent it out, and then buy maybe a small starter home or somewhat of a fixer-upper. They'll live in that house. We'll say it's a 3-bed, 2-bath house. They'll live in that and do the same thing, maybe fix it up while they live there, and eventually, again, maybe tap the equity, refinance, and then buy another house until they get to their dream house, and they've done a few moves over the course of a decade and have, we'll just say, 3 to 5 rentals. Depends on how aggressive they are with this. It depends on how good their income is and how much they're able to save and what area they're in. But let's just say that they, over the course of a decade, moved 3 to 5 times. They now have 3 or 4 rentals and are now living in a house that they potentially love, and they start maybe paying down the rentals mortgages so that they can just have free cash flow growing, and that's their retirement. So that's the live in and then rent. And I've kind of done this one myself. At one point, I wanted to have 2 to 4 rentals. We just have the one right now. I actually just tried to sell it and it fell through. I'm not super interested in this anymore. It's a really easy, relatively passive one to do. Instead of just selling a house, you just rent it out and save up for the next one. But you have to have that income to where you can actually save up another down payment, or you have to refinance and pull that equity. Otherwise, if you can't come up with another down payment without selling your current house, it's not going to work out. So that's one game people do. Other real estate investors do commercial real estate. Others do vacant land buying, flipping properties, fix and flip. That's a pretty common thing if people have television or see TV shows like HGTV. I've never seen these things, but fix and flipping properties is a strategy. There's something called short sales. Lots of these I don't know a ton about, so I'm going to just gloss over at a high level. Just wanted to mention them in the list. One strategy that's very popular in real estate lately is called the BRRRR strategy, and that's a B, I believe, with 3 R's. So you buy a house, potentially it's distressed, and what you do is you rehab this house. That's the first R. So we have BR. Once you rehab the house, you're going to refinance the mortgage that used to buy that house. You're going to pull out the value that you created, that sweat equity that you made, and you're going to repeat. You're going to roll that money into the next house. So that's buy, rehab, refi, repeat. That's the BRRRR strategy. That's one way people build up a portfolio of rental properties over time. So that's a really popular real estate game, although I'm not sure how feasible it is now. Maybe it's less popular with interest rates being so high. But anyway, wanted to at least touch on real estate. One that I've done in the past is some crowdfunded real estate. I use something called AHP. Can't remember what it stands for, but AHP Servicing. I'll link their site. I'm not going to explain it. It kind of messed up my taxes because they use a Schedule K1, and it's a tax form that comes really late in the year, so you usually have to file an extension. But I've done some private REITs with Streetwise, although I've recently redeemed that too. So that's another way you can get into real estate without actually getting into real estate, is to own real estate investment trusts, REIT. And that's basically a company that buys up real estate. It could be commercially focused. It could be single family home. It could be apartment buildings. It could be medical facilities. It could be all of the above. It could be as broad or as specific as you like, to sector, to different types of properties, to different countries, or just America, or maybe it's international. So there's different REITs you can buy. That's a passive way of doing real estate, and that pays you a dividend. The rules of the real estate investment trust fund, it's kind of like an ETF, honestly. It's like a stock that you buy, but the rules of it is that 90% of the profits have to be paid out as a dividend. So that's a relatively passive way to invest in real estate, and you get some of the appreciation and you get some of the income through the dividends. So that's a different game you can play. Again, I did Streetwise. I did private real estate investment trust. That's another way you can do it. Another one I'll mention is hard money lending with real estate. You can loan people money for 10% to buy a property and do their rehab. And again, they're only going to want to borrow this money for, we'll say, a 3 to 6 month period of time. You can charge 10%. And then once they return it, you made some money off of your money. You have to have a lot of money to do this up front, but it's one way that people do this. So that's hard money lending. Okay, that's about all I know with real estate. Again, we're just going high level. So I'm going to move on finally to Bitcoin, and we'll throw metals into it. For me, the strategy with Bitcoin is to not mess around. You buy it, you put it in cold storage, you take it off the exchange, and then you educate others about it. And you also try to spend it here and there, spend and replace. Try to create a circular economy with Bitcoin. That is my Bitcoin strategy. You could say the same thing with metals. You buy it, you store it, and that's it. And you just preserve your purchasing power as more and more fiat dollars are printed. So for me, that sums up gold, silver, platinum, and Bitcoin and stuff like that. And of course, this whole podcast is kind of geared around Bitcoin. So you can find a lot more information in some of my previous episodes. But let's move on to a few more specific games that you can try to play Some of these are income based, some of these are spending based. You might try to do strategic job hopping. Statistically, if you job hop every 3 to 5 years, you can increase your salary faster. I've hopped way more than I planned to, way more than I wanted to. It wasn't always on purpose. Quick overview is I started in tech support, supporting a really boring product, and it made me get burned out. And I knew I had to move on. So I left tech support to go on a contract, which paid more because it was a contract, but I had terrible benefits. And I just needed to get back into kind of the data analytics world. And that job kind of springboarded me, allowed me to get recruited to this other job that gave me a big sign-on bonus, a relocation bonus, and about an 8% pay increase. So I did that, took that job. And then I had a management change, ended up getting fired because I didn't get along with this manager very well. That's a very long story I'm not going to get into today. But at the same day I got fired, I got a different job with a 13% raise, again, doing data, learning new software. And I spent a couple of years there, and COVID hit. We went remote, and I was struggling there. Management was terrible. They were going through a merger, and everything was just on fire and chaotic all the time. I got recruited to a startup, and at this point, I didn't really get much of a raise. It was just a lateral move, but that job was amazing. I loved it. It was my dream job at what I thought was my dream company. I spent 2 years at this company, and I did get a pretty good raise. I think I got about a 5 or 6% raise because I performed pretty well there, and everything was going really good until we got some layoffs a couple years ago. And then I kind of took a lateral move after about 3 months of being laid off, and it's been good now. I'm at a pretty solid company. It's been fine. So my job hopping is kind of slowed, but from when I started my career to where I am now, my income has increased 86% in a decade. So I think I have outpaced inflation to some degree with my job hopping. Again, not all of it was on purpose, with getting fired and getting laid off at one point in my career, things I didn't think would happen to me. But yeah, things can get crazy. So obviously there's a lot you can do there in the corporate world with salary negotiation and trying to climb the corporate ladder, and even like doing sales. If you can get a sales job, a corporate sales job, software as a service, I know like certain companies, especially in COVID, if you ride that wave, you can make a ton of money in software sales and different types of sales. I know medical device sales is another one that can do really well. So if you are a really good salesperson, there's really no limit to how well you can do if you find the right wave and can ride that. So another game you can play with your career and your income is just having a business, starting a business, side hustling a business. I've been a longtime listener of the Side Hustle Show with Nick Loper, where people document and come on his podcast and share their different side hustles. And some of them are supplemental. Some of them end up becoming the main hustle. Their side hustle grows and scales to a certain point to where they make enough or more than they made at their job, sometimes vastly more, and eventually end up quitting their main career and going all in on their side hustle, becomes the main hustle. And it's really interesting to do. I love hearing the different things people do and the different ideas. So that's something my wife has kind of done with her business, starting from nothing. Lots you can do there. And Side Hustle Nation is a really great website and podcast that you can learn more about those different types of things. Moving more from the income side to the spending side, just cut hard on the things you don't value. Spend a lot of money on the things you do value. For me, I don't spend a lot of money on vehicles. I spend a lot of money on motorcycles, though. I spend money on running shoes. I spend money on organic food and stuff like certain health things that I do, buying meat directly from a rancher and stuff like that. So I spend heavy on the things I do value, but I have pairs of shoes, walking shoes around the house, shoes that have holes in the bottom. I have shirts from 2006 that I still wear from high school that my wife hates, but I think they're cool still. So I'm very cheap on certain things, and I spend heavy on others, but I am pretty frugal. For example, I never get drinks at restaurants. I always get water. I will almost never buy a drink from a restaurant. There's just certain frugal things that I do that allow me to cut a ton of spending. Another weird frugal thing I've done is curb flipping. I have a ton of free stuff in my backyard that I've gotten from curb finds on garbage day. I get scrap wood that I can make workbenches that people just are throwing away, scrap wood. I've picked up a tiller that I put a spark plug in. I guess they thought it didn't work, threw a new spark plug in, ran fine. I've gotten benches for my backyard, which again, I could flip these things. Some of them are a little bit sad already, but I can just use them. It's just something less that I have to buy. For example, I have a large umbrella for a picnic table in my backyard. Again, someone threw out this umbrella. It was broken. I fixed it. There's just certain things you can do. So when I go on a run around the neighborhood and it happens to be garbage day, I picked up a functioning leaf blower. I picked up a few things that I've been able to either fix and flip or just sell as is, or just use in my life and avoid making a purchase for something that I would have bought. So that's kind of a weird one. Obviously, it's not going to replace all your income, but it's just a fun one that I've done in my area. Let's move on a little bit. That kind of overlaps with income and spending is your tax strategy. And again, I'm not going to cover this heavily, but there's something called the Mega Backdoor Roth IRA. So if you make too much money and you're ineligible to contribute to a Roth IRA, you should check if you can do a Mega Backdoor Roth IRA, because if you can, it's a huge win. It's just a loophole in the tax code. So that's a big one. I will link that in the show notes. With real estate, something you could do is a 1031 exchange, where you can offset your capital gains by buying another property and just save a ton on taxes. So that's one thing that people do sometimes with a primary home or a commercial property is a 1031 exchange. There's a ton of ways you can optimize taxes with a business. Here's one thing that I do. If you know a little bit about taxes, and if you're married filing jointly, like I am, I have a few kids and a rental. I found that the standard deduction, which is $24,000 for married filing jointly, it didn't really help me. There was times that I was on the edge of itemizing on my taxes versus taking the standard deduction. And so one thing I do is I pay a 10% tithing to my church. And what I decided to do just to help with taxes, and it helps my church because I have more money to give to them over time, is that I started using a donor advised fund. And so I would save up money in a brokerage account and the stock market would grow. And then I would transfer enough to pay tithing for 2 years over to my donor advised fund. And so it's basically setting aside 2 years of tithing, and it would make me take a huge deduction in 1 year. It would wipe out the long-term capital gains tax on my stocks in my taxable brokerage account. So that's a bonus. I'm saving taxes there. I'm getting way more than the standard deduction will give me now because I put 2 years of tithing in. And then I invest the money in my donor advised fund into the market and ride the ups and downs, mostly the ups over time. And I start to use that to pay my tithing monthly. And if the stock market's down, I just pay cash for that month. But if it's up, which it has been in recent years, then I just get more money that I can use to pay my tithing. And it's still invested kind of conservatively, but that's one that helped me. And so with a donor advised fund, for example, if I had, let's just say that my income, which it's not, but let's just say for easy math that my income was $300,000. So I make a lot of money. And if I wanted to do tithing for 2 years, I would put $60,000 into a donor advised fund. So that would itemize on my taxes huge. That'd be a huge write-off. It'd save me thousands of dollars in taxes. And that money is also coming from a brokerage account, no capital gains tax now, and it's invested in the market. And I can just dole that out over each month over the next couple of years. And now I don't have to contribute directly from my paycheck. And so in 2025, if I did the big contribution in 2024 and 2025, then I don't have to contribute. And so I would take the standard deduction on my taxes at that point. And that would save me several $1,000s in taxes because I'd come in way under the limit. So it really helped me 1 year. And the year that it helps me, I take the standard deduction. The year that it doesn't, I itemize. So that's a little bit complex. I can share some resources there. I think I maybe wrote about this on my blog somewhere, but that's kind of a complex one. If you are someone that pays tithing or if you regularly donate to charity, especially pretty heavily. So again, we're going to move on. That's just a high level overview on donor advised funds. So we're going to talk about a new game that sometimes people can do. This is one that Michael Saylor came up with, MicroStrategy, what he has done. And again, I can't really explain this super well, but I can link some resources that do. But he is issuing convertible notes and debt. He's basically tapping capital markets to kind of create an infinite money glitch to acquire more Bitcoin to hold in his company's treasury. So this is called his Bitcoin treasury strategy. And so as Bitcoin rises, his treasury rises. Instead of losing to inflation, he's actually winning against inflation. And his company acquires more Bitcoin over time, and the net asset value goes up, and the multiple goes up over time. And so right now his company will just say it's worth twice as much as his treasury. And, he has revenue, but it's not enough to make up that difference either. So his company's trading at 2 times his revenue. He can sell stock and dilute shareholders and capture that premium over his treasury and recycle it into Bitcoin. So he's actually increasing the Bitcoin per share. That's one of their KPIs that they use now. Or he can issue debt. He's issuing debt at 0.625% or something, less than 1% in some instances. He's issuing debt to buy more Bitcoin, and again, increasing Bitcoin per share, and repeat. So he issues debt, he dilutes his shareholders. That's a negative on the balance sheet, you could say, but he does it accretively to acquire Bitcoin. So he has more Bitcoin per share. And when Bitcoin goes up, then his premium on his company goes up. They own 1% of the Bitcoin supply, a little bit more than that actually. And they've been doing this playbook since 2021. They've been doing it for 4 years. They've outperformed NVIDIA. They've outperformed the Magnificent Seven, Apple, Google, Facebook, Netflix, Amazon. They've outperformed the S&P 500 by a long shot. They're the number one stock since they adopted their Bitcoin treasury strategy. And we'll see if Semler Scientific, another company that's starting to do this, can execute the strategy like they have, because they started doing it on a little bit smaller scale. They're a smaller company, but that's one that's limited to publicly traded companies. But I'm sure there's ways you can do that with a private company, probably. But again, I'm sure there's other types of games, financially and otherwise, with your career, with real estate, that people do, and they play these games. It can be about self-reliance and gardening and growing your own food and capturing your own rainwater and having your own chickens and things like that. It can be all around self-reliance. It can be around your health. For example, having chickens in the backyard like I do, that's kind of a self-reliance thing. That's also kind of a health thing because you get healthier eggs, I think. So there's different things you can do there. Even hunting for your own food, you can get really good grass-fed, grass-finished meat, hunting deer and turkey and stuff like that, cheaper than you would get from the grocery store, other than the time it takes to get out there and hunt, and then to clean out the animal, and then to take it to the processor and stuff. So those are just different games you can play financially and otherwise that might be kind of financial adjacent, but just pay you dividends in a different way. Anyway, that kind of wraps up this episode. I just wanted to go over some of the financial games you can play. And if you want me to go deeper on these, shoot me a note on Fountain, a comment on this episode, or follow me on Twitter or LinkedIn. I'll link these in the show notes. And remember that financial independence is doable, and I'll be back with you soon.